Well, just in, inflation in the U.S. rose more than forecast in June, adding the pressure on the Federal Reserve to keep prices in check. Consumer prices surged 9.1% last month from a year earlier, and that's the most since November 1981. It also beats estimates of an 8.8% rise. On a monthly basis, inflation increased by 1.3%, also exceeding forecasts. Energy and food prices contributed the most to the higher reading. And Will Denslow joins us now. Will, another red-hot inflation reading, actually hotter than expected, a 40-year high, and the dollar has been strengthening. Can we expect the Fed Reserve to continue with rate hikes?
Well, absolutely. I think this is really being priced in at this point on Wall Street, considering the fact that the Federal Reserve have very much already indicated at their last meeting that they expect to raise interest rates when they convene again at the end of this month, to raise interest rates between either 0.5% or 75 basis points. So many analysts will be expecting that we can expect another 0.75%. Of course, the real concern for the Federal Reserve is if we strip out the volatile parts of the CPI, this consumer price index data. So if we strip out food, if we strip out energy, and we look at just the core issues, things like rent and things like that, then we still see core CPI increase 5.9% compared to a 5.5% increase for the month of June. That will be a serious concern for the central bank.
Will, and what has the reaction been on Wall Street? And are traders expecting that, inflation could have finally peaked? I mean, earlier this month, we've seen the prices of energy and oil decline.
Well, this is already having an impact on the markets before the stock market even opens for the day. Of course, it's set to open in just over half an hour's time here in New York City. But we've already seen Dow futures down around 1% at last check. Of course, US President Joe Biden is in the Middle East to try and get Saudi Arabia, as part of his many objectives in the region, to perhaps start increasing the output of oil in a bid to drive down prices. Of course, recently in the US, we've seen petrol prices hit $5 a gallon. It's ticked down ever so slightly since then, but still up at huge highs. So this is a huge concern, both politically for the US administration and economically as well. There are real hopes that more can be done to keep lowering these gas prices, which of course could have big impacts in dragging down overall price pressures. Of course, the Federal Reserve will keep taking action as they hope to hit that 2% inflation target in the future.
Oh, thanks for speaking with us, Will Denslow there in New York.